been Reppond. Today is January 17, 2024. Welcome to my YouTube broadcast. So before I get into the data for the market for this last week, I want to cover what was newsworthy last week. One of the things that was newsworthy was that the Securities and Exchange Commission approved exchange-traded funds, ETFs, for Bitcoin. So companies that are sponsoring these are coming out with them. One of them was BlackRock. They came out with IBIT and as one, but there's others. And so it did not have the effect, did not have the positive effect immediately that it was expected. But I think my guess is that this will open it up to more institutional investors who are now interested now that there's an ETF, and probably a lot more individual investors. So it is expected, whether it's true or not, I don't know, but it is expected that this is going to have a positive effect and a stimulus for the price of Bitcoin and for these ETFs. So that's what I would say would be the news that I wanted to pick out and share that with you today. So let's get into the dashboards. The first one is, this is the major stock market indexes as of last Friday, the 12th. And so I'm going to focus, in the yellow box are the gains or losses for the ETFs, and I'll explain those, and for the week, and then year to date, which is basically just 2 weeks, you can see in the pink box. So in the yellow box, so for the last week, the NASDAQ 100 did by far the best. Developed markets did well, and the S&P 500 did well. Other than that, everything else was either struggling or negative. So, but year to date, meaning 2 weeks, almost everything is negative except the S&P is positive by a tiny amount, and the NASDAQ 100 is approximately break even. So to the right of that, you can see where these are relative to their 20, 50, 100, and 200-day moving averages. So you have 5 out of 28 that are potentially, that are negative, and the balance are positive, 23 positive. And this includes the 6 equity indexes, the Dow, S&P 500, Russell 2000, and NASDAQ 100. And then the 2 developed markets, the developed market and underdeveloped market, EFA, EEM, and then the 20-year government treasury bond, ETF, which is TLT. And I put that in there just as it's a popular government bond ETF. So kind of off to a struggling to a negative first part of the year, following the last couple of months of last year, which were very positive. I think the year is going to be a very rough year, but I think it's going to eventually end positive. That's my guess. That's not really a prediction, that's just a comment. So don't say, Ben said the market's going to do this. But then when we get to the S&P 500, this is, break it apart into its component parts to the sectors. This gets a little more revealing about what's going on. And again, I'm going to focus on the pink box, which is year to date, meaning 2 weeks. And this is ranked from the best to the worst. So the best would be a defensive ETF, healthcare, XLV. The next one, XLP, consumer staples, another defensive sector. So if I were to pick the 2 most defensive sectors or lowest volatility, I would have picked those 2. So they are at the top. Last year, in an up market, they were at the bottom. The year before, 2022, which was a negative year for equities, they were again at the top, along with energy. So very interesting, how these things play. When you're in a defensive environment, things are going down. A picture like this is not surprising. And then after that, you can see everything in the pink box below those top two continue to go all the way down. Retail, consumer discretionary, basic materials, industrials. I mean, they have not done very well for just a couple of week period of time. Because they were so far above their 20-day, all of their moving averages, we don't have much degradation there. So a lot of them are still above their 20, 50, 100, 200-day moving averages. But because of this has come down, you can see there are 6 of them that have now broken below their 20-day moving average. So, okay, this is the picture, an 18-month picture of the S&P 500 chart. This is a weekly chart. So when it goes up, that represents 1 week, and when it goes down, 1 week, and it goes up and down over that 18-month period. And you can see where it is, even though it has struggled, look where it is so far. This is the S&P 500. So there's sectors inside of this. There are other indexes. There's a lot of views out there, but just for the S&P 500, you can see that it still is in, generally speaking, an upward trajectory, which is why it is above a number of those averages. When I put on a relative strength chart, the growth and value, SPY-G and SPY-V, if it goes up, this represents the numerator, which is growth, SPY-G, and when it goes down, it represents the value indicator, which is SPY-V. And so here we have, from the beginning of 2023 through this first couple of weeks in 2024, we have an upward trajectory, which I show with the black arrow. But then toward the end of last year, 2023, it was going down. And then even though the market went, it struggled. I mean, it was mixed, the growth side of the market took off. And that's represented by that sharp move up at the very end. And so now, it was enough to trigger our growth side of our equation. So we're in growth stocks right now. And we went in sometime this past week, I think. So for now, it looks like it's probably headed back into the growth area. We'll see over time, but that's a pretty positive move in the last couple of weeks. When we stay on the relative strength side, and we put large cap, SPY, SPY, S&P 500, divided by the denominator, IWM, which is the Russell 2000, small cap. So large divided by small. So when it goes up, it favors large cap. Goes down, it favors small cap. So you can see, again, the same kind of thing happen. So not only did growth go up relative to value, but look at what happened with the large companies versus the small companies. Said the other way, small companies had that much of a decline. You see that mark up at the very far right of the chart. If we were to invert that chart and put IWM, small cap, as the numerator, that's how far down small cap would be relative to large cap. So, but it still is in an upward trajectory, favoring large cap and favoring growth over, say, the last year or so. Long-term government bonds, TLT, ETF, pretty much didn't change much last year. So, but you can see, last week. But you can see from the black arrow, I gave you a 42-month view. You can see over that period of time, the price of bonds has been coming down, which tells you that the interest rates on bonds, or the premium on bonds, the yield, has been going up. It has to go up for bonds to come down. The dollar, is long-term in a upward trajectory relative to other currencies. So if you think the dollar is losing value, you're not comparing it to other currencies. So if you're in another country, say another continent, you're in Africa or you're in Europe or Asia or something, and you're buying something with dollars, what this tells you is in those currencies and in those economies, the dollar is still strong and is doing very well. So your dollar will go further. Conversely, their currency, when they come here, doesn't go very far. Gold, same thing, is in an upward trajectory. Has done very well. Particularly, I'll show you silver next, and you can see relative to silver, it's doing very well. So it seems to be holding up and showing strength. Silver is up, but that pattern for the last 8-9 months is kind of a sideways pattern, up and down and up and down. So it's, longer term it's gone up, but is right now, I won't say it's weak, it's just indecisive. When I put those two on a relative strength chart and I show how is gold doing relative to silver, gold numerator, silver numerator, gold denominator. So when it goes up, that is going to favor silver. When it goes down, that favors gold. So you can see, I put a black arrow in, you can see the trajectory for the last year or so, definitely moving down, which tells you the degree to which it favors gold. Now, I've said to you before, I'm a fan of silver. I own silver, and I own minimal gold, and there are reasons for that. This is not one of them. I don't personally care if it goes up or down because it's not the reason I buy it. I buy it as an insurance policy against the decline of the paper dollar. And if that happens, or when that happens, or as we watch it happen, I'll be glad that I have precious metals of some sort. What I prefer is silver as an insurance policy. But if it goes down far enough, I'll probably just go back in and buy some more. But, it doesn't bother me at all that it goes down. Bitcoin. As I said to you, Bitcoin has been rising. It is down a little bit this week. You can see that at the end of it. And but overall, for the last year or so, 12, 14 months, you can see definitely an upward trajectory in Bitcoin or in the ETFs representing Bitcoin. Volatility. So while volatility, some of the market was negative, the volatility index, which would normally go up, did not. The volatility index actually came down a little bit. So we're down in the 12s. And I put the black mark above that at 24, which is my arbitrary mark for higher risk. When it gets above that, particularly if it's rising above that, that's a period when we're entering a period of higher risk. But you look back over that period of time and you can see definitely the volatility of the market has come down. Asbury Research does reports on metrics, and one of them is what they call the Asbury 6. It is 6 indicators, 5 of them technical, 1 of them fundamental, and 4 of those are negative. Last week there were 2. Now there's 4, meaning only 2 are left that are positive. So this is signaling, the way they look at it, this is signaling more of a negative market. So that's interesting and kind of, I guess you'd say, somewhat of a macro indicator. When we look at the cross-asset relative performance, you can see, okay, let's compare some classes of stocks or of assets. So the ones that I look at are the ones in the last week, the last month, the last quarter, going the last 3 columns. So technology, NASDAQ 100, is stronger than the broad market, the S&P 500. Growth stocks are better than value. You remember the chart I showed you on growth and value. Growth is done very well. U.S. market is better than developed, and U.S. market is better than emerging. And corporate bonds are better than government bonds. U.S. versus the world. The U.S. is doing very well. So the ones not in green are the U.S. So the ones that are for the last 3 time periods that were stronger, U.S. is stronger than are Chile, Brazil, Canada, Italy, Germany, Spain, France, UK, the entire Eurozone, Malaysia, Singapore, Taiwan, South Korea, China, Thailand, and Australia. The ones better than us are Japan and India. Okay, now I'm going to report on gold and silver. I've already given you the charts, now I'll give you the data. Gold is at spot price of $20.52 per ounce, to which you have to add the markup to it. That's up 0.1% from the week before. Silver, $23.26, and that is about the same as it was the week before. The ratio is holding at 88-1, which favors silver as a better buy historically. Monster box of silver, if you want to buy a quantity of 500 rounds of generic silver, which is a common way to do it, that box is $12,755 as of last Friday. And the markup on top of spot, which I just gave you, is $225, making the cost per round in a box of 500 $25.51. If you take just one of those tubes, a tube of 20, then it's $26.01. So you're paying a 50-cent premium to get it in that kind of quantity. And that source of information is my son Preston, which is the price he sells it at. But you can use these prices to negotiate locally, or at least as a benchmark to compare with prices that you see. I do not recommend buying gold or silver over the internet or from someone that you cannot see, or a brick and mortar shop or something. If it's just something that comes across the internet, I've just seen people be burned. There's probably good outfits out there, but I'm not skeptical of them. I just think I'd pay a little bit more if I had to buy it from a brick and mortar company or from a local company. Okay, I mentioned yesterday in my video that I got a new dog about a week ago. And he is half Great Pyrenees and half Anatolian Shepherd. And this is a picture of him. So he's 8 weeks old. Maybe he's 9 weeks by now. And all the puppy things that you go through. So I love my dog. I've always had dogs. So if you're a dog person, you can relate to this. He is very sweet, very cuddly, and just affectionate and awesome. So I'm delighted to have him. So I just thought I'd share that with you. And this is the period of time where you go through and you do the training. And so I'm doing the potty training and going outside every hour or two and all that. But so far, no accidents. So I guess it's working okay. But I'll get through this time period. So thank you very much. If you have questions or comments, leave them in the comment section below. Thanks.